Between my websites and my conservation easement, I wiped out more than $2 million of what I would have to pay tax on. So that's pretty sweet.
It takes one free person to create change. 1% bold enough to bend the rules, curious enough to chart new territory. This is the show for them. While the other 99 watch their best opportunities, their potential, their health, and even their legacy slip away, we are different. We question the system. We create new possibilities, and we pursue the edges of every area of life. My name is Ryan Daniel Moran, and I'm an entrepreneur and an investor. I'm an independent, a father, a skeptic. I'm on a journey just like you. Others may watch us, question us, even blame us and tax us, but we press on in a relentless pursuit of freedom. We are the creators of the free world. This is capitalism.com, and we are the 1%.
Oh, hey, podcast listeners. Welcome to a podcast. This is Ryan Daniel Moran, and today marks the 1-year anniversary of me finalizing the sale of one of my companies, a majority stake, and exiting to a private equity group for an 8-figure payday. And obviously a great day, the biggest accomplishment of my entrepreneurial career as of that point. And today I'm going to tell you how I invested that cash over the last year to generate passive income and actually pay a lot fewer taxes than what would have otherwise been the case. So I'm going to break down exactly where I'm investing, what I'm tracking right now to invest, and the results of those investments. So if cash flow is your aim, or you've got cash sitting on the sidelines wondering where to put it, this is going to help you decide how to allocate it, or at least help you see where I decided to make those investments and why I did those investments. Okay, so it's the 1-year anniversary of me making $10 million. Yay! Actually, a little bit more than that. But I still own, just full disclosure, I still own a minority stake in that company. I still own 20%. And the goal is for that company to grow and for us to exit and have another 8-figure payday for me, which would be pretty great. And I'm going to be sharing on an upcoming episode exactly what that structure looks like, what the private equity model looks like, because it's something that I am going to be pursuing over the next couple of years. And the idea of buying businesses and investing in businesses is the next stage of my career. So I'm going to open up and share a little bit about where I'm going with that and what I've learned from the sale of a business, the purchase of a couple businesses, and what that equity model looks like, because I've started to advise some private equity groups, and their model is something that I had never seen before, and I was not aware of how they approach business. The word private equity was always kind of mysterious to me, but now that I get it, it's not all that complicated, and it's actually really exciting. Excuse me. Anyway, that's a topic for another day. I get excited and choked up when I talk about private equity and investing. Let me go into how I invested the capital that I did receive when I exited the business. All right, so I have a mentor, a friend, a colleague, a backroom advisor. His name is Kamal Ravikant, and Kamal is one of the top advisors in Silicon Valley. His brother is Naval Ravikant, who has been on the Tim Ferriss podcast a few times. He is the founder of AngelList. So the Ravikant family is very well connected in the entrepreneurial space. And Kamal gave me some advice when we were on one of the bridges in Austin, Texas, walking from my apartment to True Food's kitchen. And Kamal said to me, we were talking about investing the money because he runs some funds in the crypto space. He runs funds in Silicon Valley. And I said, hey, Kamal, if you were me and you were about to get a big, fat, old paycheck and you didn't want to ever have to work for anybody else ever again, where would you invest the money? And he said, you know what I would do with the money, Ryan? I would advise you to do absolutely nothing for at least 6 months. Hold on to the money. Let it sit in the bank account, because you will be in a hurry to get rid of that money. And one of my best friends here in Austin and one of my business partners, Clement Wan, said something very similar. He calls it the Bladder rule of finance. The more that exists in the bladder, the more pressure there is to piss it all away. And I almost heeded their advice. I have invested a little bit less than half the money that I have received, and I've held about half of it in cash up until this point. So I half heeded both of their advice to do nothing for the first 6 months. But the reason why I decided to deploy some of the capital right away within the first 6 months was because I wanted to reduce the amount of taxes that I would pay as much as possible. And there are investments that allow you to keep more of that money when you invest in those asset classes. So the first two things that I did was I looked at what could I invest in that will allow me to keep more of my money. And my goal for this, few $1,000,000 that I received, and I knew I would pay probably, at least $1 million in taxes, and I wanted to reduce that as much as possible. But with the money that I had from this exit, how could I set it up so that I would have guaranteed cash flow for the rest of my life so that I never have to work again if I don't want to, and I'm free to make business decisions purely out of desire and want and never have to think about money again or do anything for money ever again. So in order to do that, I have to keep as much of this as possible from going to the government, and I need to not lose it, so I can't invest into anything stupid or speculative. For example, I have one friend who sold a business, pocketed like $4 million, put it all into crypto, and that didn't go so well. I don't want to do that. So the first thing I did was I put about $1 million into income producing websites. And the reason I did that was twofold. One, the most important thing to me, and when making that decision, was that websites have accelerated depreciation. Now, depending on what CPA you ask, you will get different opinions on how fast you can write off a website. I've had some CPAs tell me 1 year. I have had some CPAs tell me 3 years. I've had some CPAs tell me 5 years. But the point is, in a certain amount of time, you're able to write off that entire amount. So even if the whole thing went to hell, even if the whole thing went kerplunk, I'm at least getting $1 million write-off, right? So at the very least, I'm going to put that money somewhere and get $1 million write-off, which in my tax bracket is going to save me $500,000. So I get half of that savings back. That's a pretty sweet ROI. That's a pretty good use of capital if you're going to save that amount of money in taxes in a short amount of time. And the ROI on websites is very high. So I accomplished 2 of my 3 objectives right out of the gate of getting as much of a write-off as possible, which, was $1 million right out of the gate, which was really substantial. It basically wiped out all of my normal income. And so the rest of my income was from just the business sale, which was taxed at capital gains. So right out of the gate, I saved myself a bunch of money. And the other piece was that I locked in really healthy cash flows for X number of years. And of course, anything can change, but businesses on the internet that are just websites tend to be able to be purchased for about 2 times their yearly profit. So if there was one website that was making, I want to say it was making like $120,000 a year in cash flow, and I bought it for $310,000. So I paid like 2.5 times, which is pretty high. But I saw some opportunities there. It was actually, the site was pretty well situated to be able to support a physical products brand if I decided to launch it on that site. That income stream of $120,000 you lock in year 1. that's pretty exciting to be able to just pay cash for that type of cash flow and get a huge write-off for it. That is nothing to sneeze at. Now, the thing you don't get in buying websites is like the guarantee that nothing is ever going to change or go away. You get your really nice cash flow and you get the write-off, but you don't necessarily have the guarantee of that money never going away. So I used Income Store, which is run by my buddy Ken Courtwright, where they're basically a management company that uses their systems to optimize the websites. They take the majority of the cash flow in exchange for a guaranteed payout. And I don't want to misrepresent them in any way. So if you want to look them up, they're incomestore.com, or you can listen to any of the podcasts that I have done with Ken specifically. So it's a bit of a unique asset class. If I had nothing else going on, all I would do is buy websites and create a portfolio of websites. And I know that there's a publicly traded company that does that, that owns like Match.com and a bunch of other major websites. But the ROI on that asset class is ridiculous. You know, it's 40 to 50% year one, and you get a write-off. I mean, that's just silly. I mean, it's just absolutely stupid to not consider that, in my opinion. It's something I'm very bullish on. And if any of you have a portfolio of websites and need capital or want to partner, it's something that I would consider if I wasn't the operating partner in that, because I think it's absurd, the opportunities that exist there. All right, so I did put $1 million into income producing websites for the tax write-off and for the cash flow. The next thing that I put money into is I put $250,000 into a conservation easement. A conservation easement is something that we discussed at the Capitalism Conference last year. And my buddy Tom Wheelwright talks about this as a kind of a way to maximize your write-offs as an entrepreneur. Basically, a conservation easement, the way it works is there are organizations set up that protect pieces of land from being developed. And because you are protecting land, the government incentivizes that donation that you make. So this is not an investment. This is a donation that you make into that organization, and they protect the land. And it is written off as low as 3-to-1, but sometimes as high as 6-to-1 ratios. So, for example, if you put $100,000 into a conservation easement, you might get a $500,000 write-off. So if you're in the top tax bracket, that means you're going to save $250,000 in tax for a $100,000 donation. There's other asset classes that do this. For example, some forms of art are depreciated at an accelerated rate like that. I don't know anything about that, so I just went to an organization that does conservation easements. I got a recommendation from a friend. I donated to it, and I got a $1.5 million write-off. That's pretty absurd. So between my websites and my conservation easement, I wiped out like more than $2 million of what I would have to pay tax on. So that's pretty sweet. These are all incentivized asset classes. These aren't loopholes. These aren't unethical. These are things the government says, we want to incentivize this kind of stuff, so put your money here. And Ryan says, okay, I'll do that, right? Because I want to keep as much in my pocket as possible. So I saved a bunch of money on taxes. I basically wiped out all my normal income, only paid capital gains. I locked in tens of thousands of dollars in passive income that will exist indefinitely, and that was only a small part of the amount of money that I took from the sale. Okay, we're doing pretty good so far. Now, that was all I had in mind that I needed to do within the first 6 months. That was all I wanted to do. And the reason for that was I wanted to honor that advice of doing nothing with the money for 6 months. It should hurt when you make an investment somewhere. But there's a couple other places, like the next piece, the next kind of thing that I wanted to do with the money that I made was I wanted to put it into what I would call fun business. So areas of business that I want to do more of, areas of business that make my life better. So, for example, one of the things that I did when I sold the company was I hired a mentor, and a very expensive mentor, an $80,000 a year mentor, to basically speak with him once a month. And I did that because it was somebody that I wanted to work with. I would obviously get a write-off for it because it's a business expense to hire a mentor. And I knew that over the course of a year and 2 years, that mentorship would be worth millions of dollars to me. And now I had the flexibility to be able to do that because of the money that I got from the sale. So investing in that mentorship made total sense. Investing in that mentorship was now an investment with an ROI rather than a tense thing that I had to sweat over. And obviously relationships and experiences and knowledge are the things that impact your growth the most. You are the greatest source of ROI your business will ever have. So that investment in yourself and mentors and masterminds are going to be the things that ultimately create the highest ROI. So I went out and hired the person that I had wanted to hire previously, but I just couldn't justify biting the bullet on an $80,000 a year mentor. But now I could, because I was in between things. I needed to kind of explore my next steps, and he was the person that I wanted to work with in order to bridge that gap. His name is Kevin. I've talked about him on Instagram and on Facebook, and I'll probably have him on the podcast here at some point. So that was the next thing that I invested in. He has a phrase that I just love, which is the purpose of money is 100% fun. And more money should equal more fun. And sometimes business is fun, and you should go all in on those areas. So one of the things he's helped me do is identify the types of people that I want to work with, eliminate the types of people I don't want to work with, eliminate the things I don't want to do, and to go all in on the things that I do want to do. So with that in mind, I went ahead and made the decision to invest $85,000 into a company that I was really excited about. And it was a company that came from the tribe. And I've talked about it here on the podcast. It's a company called Neatpack. And Neatpack is a travel and backpack company. And I just love the company. And I love the founder, Hanny. And I love what they're up to. And I'm really proud to be part of their journey. And I don't need any ROI from that. So I put $85,000 into that. There's a couple other companies that I've either put money into or would consider putting money into, and like looking at the spec sheets right now because it'd just be fun to work with those people. Like, I don't even care if I get a return. I just want to hang out with those people. So that's the kind of stuff that I would consider fun business, that, you know, I don't get a write-off for it. It might give me a return over the next couple of years, but really it's just fun. Like, I just want to work with those people. Hey guys, Ryan here, and as you have heard me say about 1,000 times, I'm getting tired of saying it by now, I sold a company in 2017 for a nice 8-figure check, which was great. But at the end of the day, all I really care about is passive income. So that's why I'm in this game. And that's why one of the first things I did when I sold the company was I called my friends over at Income Store and said, hey, I want to buy some income producing websites. And the reason I did that is because buying websites has some really strategic tax benefits. It also has a very attractive ROI, and they can go up in value. So I called my good friends at Income Store in order to see where I could park some of this cash for tax efficiency, for upside, and for passive cash flow. I would do this on my own if I had the capacity to do so, but they're a management team that will automate the process for you. So I used them in order to make it truly passive for me. Again, I love this stuff, so I would do it on my own if I didn't know the good folks over there, and if I
had nothing else going on in my life. But it's a really interesting vehicle that I think more people should consider. I've had Ken, the founder, here on the podcast. You can search Freedom Fastlane Income Store, and if you want to find that episode, or you could just go to incomestore.com and see more about what they do. But they're always at our events. They're always very compelling when they talk about their model and talk about passive cash flow. And I think you'll really enjoy hearing about their philosophy and seeing how their model works, even if you don't decide to use them. So you can go to incomestore.com or search Freedom Fastlane Income Store to find out if investing in income producing websites is a fit for your goals.
So I have invested into a few businesses because I wanted to know the founder, or because I wanted to just be part of their journey, or just for the sole reason that it was fun. So that's what I would consider fun business. And I documented that on YouTube and here on the podcast. If you just search Ryan Moran Neat Pack, you'll see the whole story of me investing in that company. The next thing that I would consider fun business is that I paid cash for $1 million lake house. I shouldn't have paid cash for $1 million lake house. I should have used leverage. I should have borrowed the money in order to buy the house, because it doesn't make sense to pay cash for a lake house. But I was in a bidding war with a couple other potential buyers, and me paying cash got me the deal. So I paid cash for a lake house that I am currently renovating from top to bottom, and I'm going to hold workshops there. I'm going to hold networking events there. I'm going to hold networking brunches and meetups there. And I am doing that. I'm considering that an investment. I'm considering that a business investment. Now, I don't get a write-off for that $1 million, but it's something that I'll use for business purposes and will have write-off opportunities over the next couple of years. And because relationships, I think, are the highest source of ROI, that will produce a really healthy ROI over the next couple of years. So I consider that fun business. And I'll also, once the renovations are done, I will probably borrow against the house at the higher valuation, get it at a really low interest rate, because interest rates are still historically very, very low. And I'll put that money into a higher form of ROI, like more income producing websites or more real estate funds, which we'll talk about here in a second. I mean, here, check out this math for a second. This is just nuts if you run this. So I paid cash for $1 million lake house, right? So $1 million goes into this lake house. That money's gone. But if I borrow against it and I borrow the $1 million back from the bank, if I borrow against the house, and I know you probably can't borrow 100%, but just go with me for a second. So we get that $1 million back, and now I'm paying 4% interest on that money. But I take that money and I buy $1 million more of income producing websites. What does that do? Well, first, it gives me another $1 million write-off. And second, if that's producing 20% ROI per year, I have now created a difference of 12% annualized interest on that money. So rather than having a paid-off house, I now have $120,000 a year in passive income, and I saved $500,000 on my taxes. That's nuts. It's just nuts. It's so crazy what's possible when you start thinking like an investor rather than, just looking at expenses. It's so fascinating. I'm learning so much from this process. All right, so the lake house was the next thing that I bought into. And this is going to surprise some of you, almost all of you. I did buy some crypto. I bought some cryptocurrency, everybody. Why did I buy cryptocurrency? Pure fun. Pure learning experience. Pure, I gotta see what this process is like. If I'm going to knock it, I have got to understand it. I have been very, very critical. I've been very public, unapologetically critical
of cryptocurrency. And if I really want to have an educated opinion about it, I can't just be on the sidelines. So I did two things. I put maybe about $40,000 into an account and just played with it in different cryptocurrencies. I have not bought any Bitcoin ever out of sheer principle. I think Bitcoin is the biggest bubble in history. I don't think there is any technology that backs it up. I cannot stomach the thought of even transferring money into Bitcoin. So I avoided that. But I also put I think I put $25,000 into a crypto fund run by someone very close to me, because I don't pretend to know enough about crypto to be able to make wise decisions. I trust people who are well exposed to that space. In a few minutes, I'm going to talk about real estate, but this is a good analogy here. In both real estate and in cryptocurrency, some people think that they're smarter than the market. Some people think that they can go find the opportunities better than people who are doing it day in and day out. I don't claim to be that good. I don't buy single family houses anymore. I don't buy multifamily real estate. I just give my money to the people for whom that is their business. And I let them make the decisions. And I've done the same thing in the cryptocurrency space. Yes, I have some skin in the game because I want to be able to knock it and understand it. But for the most part, I've given my money to people who this is all they do. They look for crypto opportunities. And they look for the really good ones, and they call me when there's a really special one. Okay, I'll take a chance on you since you're in on this all the time. So that is how I make my speculative investments. Okay, so I put money into the write-offs, which is the income-producing websites and the conservation easement. That secured a very low amount of tax. It also secured a lot of cash flow for me. I then put it into fun business, like some cool investments I was excited about. I bought a lake house, and I threw some money into crypto. All right, so fun business was the second point. The next thing I wanted to do was I wanted to shore up a little bit more cash flow. So I want to have $25,000 a month in passive income that I never have to worry about. So besides income producing websites, my favorite source of this right now is in real estate investment funds. So these are like syndications and funds that pay a fixed amount, a fixed rate of return, and don't require me to go figure out the business model. So I'm investing in funds that, will pay 9, 10, 11, 12% rate of return. I'm getting that cash flow. And then in a couple of years, I'm going to get that money back. And I'm going to get that money back because the fund is going to pay out all of its investors out of either closing the fund and giving investors back their cash, or by simply borrowing against the fund and paying back their investors. Real estate syndications and funds are really interesting because your capital is only locked up for a few years. You get the cash flow. Sometimes you get some tax benefits from it, and then you get your principal back within a few years. That's really interesting. So that secures cash flow without spending the principal, if you will. So I've had 4 peaks on the podcast in the past. Full disclosure, they're a client. So is Income Store, by the way. And also, I'm a client of these. So they give money to me. I give money to them. We all work together. So it's all a big conspiracy, everybody. So do your own due diligence when considering any investment. Please do your own due diligence. Make decisions best for you and your family. Don't make investment decisions based on what's best for me and my family. It's different for everybody, but this is, after looking at a lot of options, this is what I decided to do with my money. So I now have a lot of passive income from income producing websites, from real estate syndications, and I got to save a lot on taxes from all of these different sources, which is really cool. Let's talk a little about what I would have done differently. In a perfect world, I would not have paid cash for the lake house. I would have borrowed money for it. But because I got a really good deal based on the fact that I could pay cash, I probably wouldn't do that differently. But I probably would have waited a little bit longer. I did buy the house I wanted. It came up. It was available. I had my eye on this house for months. It happened to come on the market. I bought it up. I got the one I wanted. So unique situation, but in retrospect, I might have sat on the money a little bit longer. I was pretty eager to buy that house. The next thing that I would have done differently is I probably would have bought more dividend-paying stock. That's what I'm eyeing next. Dividend-paying stock is just, it's like the engine that could. It's the Energizer Bunny. It just keeps going and going and going. And I've always allocated a small part of my portfolio to dividend-paying stock. I think dividend-paying stock is like the place that I should have just put hundreds of thousands, if not millions of dollars into. And that's kind of what I'm eyeing right now. That's what I'm looking at right now. I'm looking at how I can safely and wisely deploy more money into dividend-paying stock, because I think we're going to have a pendulum swing from all these growth stocks, the Amazons and the Netflixes of the world. I think that money is going to flow into dividend-paying stock here pretty soon, because I think interest rates are going to go up. I think that the growth stocks are kind of at a peak, and I think we're going to see more interest in income coming forward. I think the big boom period is finally going to slow. Doesn't mean the economy is going to come off a cliff, but I think there's going to be more of an interest in cash flow here pretty soon. Just my opinion, but I've been wrong before. All right, next, the investments I'm going to be making are in a lot of advertising. So I am going really hard into blowing up my brand and the capitalism.com brand. I've said here publicly on the podcast that we scuffled out of the gate. We had some setbacks with the team. We had some setbacks with strategy. We had some setbacks with Ryan being completely burnt out. Now that I'm back in the saddle and I'm feeling pretty good and my team is really rallying and we've got some cool initiatives going, I'm feeling really freaking excited to get back at it. So we're going to be advertising aggressively to grow our audience. And I'm really, really excited about that. And if that requires some of my capital to go into it, so be it, because advertising is as cheap as it's ever going to be. And I don't think that there will be an opportunity to build physical products brands or to build a following. I think we're in a beautiful time to start planting seeds for 8- and 9-figure businesses over the next few years. And if you don't have skin in the game, you are going to miss it. And then the final thing that I really need to shore up is my insurance policies. So I've said publicly on the podcast before that I was kind of tricked by a slick salesman a few years ago into buying a really expensive life insurance policy that I couldn't get out of. Gave him a fat old commission, cost me a lot of money. Then later I met Sam Prentice, who is just a saint of a human being. And he does it professionally, does capital warehousing and infinite banking for high net worth individuals. We've done a couple episodes together here on the podcast. And I'll be we're currently exploring, now that my policy is matured and can be moved, we're looking at moving it into more of a structure that he has, and we're exploring opportunities there. So I need to shore up my insurance policies. I'm investing into ads and my team and my businesses, and I'm deploying all of my personal capital that's remaining into dividend-paying stock. And I'm keeping several years of expenses on the sidelines until the next exit, until the next 8-figure exit, when the company sells again and I get, $5 or $10 million more. I want to keep a certain amount on the sidelines just in the event that we have an economic disaster and things come on sale and I want to buy up a lot of things. I want to have a decent amount of money ready for that possible scenario. One thing I wanted to address was real estate. And if you notice, I didn't buy any houses, or I didn't buy any commercial real estate, and that's intentional. I used to, whenever I made money at the end of a quarter, at the end of the year, I used to put that into a single family house. I don't do that anymore.
And the reason is because I have found that that's a business. It's not the business I'm in. I get into friendly arguments with my buddy Jason Hartman, whose business is buying single-family real estate, that, I could make so much more money if I just bought the houses myself, but that would require time away from my businesses that have absurd ROI. It makes more sense for me to make my money in business and invest it into the people that are doing real estate as a full-time thing. Behind every investment, there is a business. There's no real thing as passive income. There could be passive income for you, but something has to be working in order for any money to be generated. So the only way that real estate is really passive is if somebody else is on the ground floor managing that business. And for me, I've decided to just give my money to the experts whose business is real estate and let them make the investment decisions. And so I'm not buying any houses. I'm not buying any multifamily. I'm just going to, and I explored it top to bottom. I really considered it, but ultimately I was like, I want this to be passive and I don't want to manage this. Like, I don't want the fear of a downturn. I want to go to the fund that has to pay me and has to figure it out. You're investing in a business when you're investing in real estate. So rather than pretend I'm good at the business, I just decided to partner with the people who actually were good at the business. So I invested in income producing websites. I invested in a conservation easement. I invested in fun businesses. I bought a lake house. I invested in some crypto play money. I invested in a hard money fund, which was pure cash flow. I'm investing in Four Peaks, which is a high yield real estate fund. I'm investing in dividend paying stock. I'm buying advertising and investing in my team, and I'm shoring up my insurance. Those are the things that I decided to invest in once I got a big check. This is my favorite thing to talk about. I could talk about it all day. I'm considering talking about it more on my YouTube channel, maybe even holding some workshops at my lake house to talk about this with other entrepreneurs who are at this level, because it's really fun for me. Entrepreneurs are more risk tolerant. We tend to be bored by low yield, and we like new fun things, which means we sometimes make stupid decisions unless we're following a good strategy for getting cash flow, wealth, and tax efficiency out of our investment. So I'm considering talking about this more. If you'd like to hear me talk more about this, let me know. I'm on Twitter at Ryan Moran, Instagram at Ryan Daniel Moran, or Facebook at Ryan Daniel Moran. I'd love to hear your thoughts on this topic and answer any questions you've got. And in the meantime, I'll be posting some more of these strategies on my YouTube channel. Just search my name on YouTube. Hey, thanks for giving me a platform for being able to share this stuff. This is fun for me. So thanks for listening. If you know an investor who has money sitting on the sidelines, wondering where to put it, send them this episode. Thanks for listening, and I'll chat with you guys on the next episode. If you've been listening to the last few episodes of the show where we've featured entrepreneurs who have crossed the 7-figure mark and are on their way to 8 figures, then you undoubtedly have heard us talk about the Backroom. The Backroom is a group mentoring program where we cast the vision for getting to $10 million a year and beyond, and being ready to sell your company, because ultimately that's where the big payday is going to come from. We also open up investment opportunities so that you can put your profits into places that give you more wealth and potentially more cash flow, or even help you save on taxes. We have some pretty cool places where we put cash that give you sometimes all three. Plus, you're in a room with people who are the best in the world at what they do. We bring in my team of advisors that help people get into retail. They help people clean up their systems. They help people clean up their books. They even help them reposition their companies so that they can be sold for more money. We also talk about what's working right now on Amazon and on other channels, but the focus of the group is on casting the vision to get to 8 figures and beyond and clearing all bottlenecks that stand in your way, while also opening up other opportunities for you to enjoy a life of freedom.
because that's what we're after here. We're not just after this to work hard and work 16 hours a day. We're doing this so that we can have freedom, and we get freedom by making enough money so that we can invest into places that allow us to never have to work again, and then building empires with people that we love doing business with. And that's what we're doing inside of the Backroom. And I could also tell you that we're looking to buy into some of our students' businesses through something else that we're doing pretty cool in the Backroom, but I will save that for another day because that is still in process. But if you have an idea that you're not sure how to bring to the marketplace, if you've got an audience that you know could be the fertile ground for a really profitable 7-figure physical products brand, or if you're selling enough product to be able to say, I could step on the gas here. If you've got that million in sight, or you're beyond the million, and you know that it's time to accelerate the process to get to that 8-figure mark because you're playing the review game, you're playing price wars, you're tired of sacrificing profit margins, you're working way too long for too little result, and you want to clear those bottlenecks so that you can grow faster and have a sellable company so one day you can have that ideal freedom lifestyle, we can help you inside of the Backroom. It's one of the more expensive things that we do. It's also the highest ROI thing that we do. So it is application only. You need to be ready for it, and you need to be ready to move when you join. So you can go to freedomfastlane.com, click on Backroom, and see the application, see all the pricing details from there. Working with me one-on-one starts at about $100,000. Joining the Backroom is a little bit less than that. So just know going into it that it's a serious investment, and it is only for people who either have funding, have sales, and are ready to go once they join. So if that's you, go over to freedomfastlane.com, click on the Backroom, and you'll see the application and full details there.